All right, guys, welcome to another live stream. Welcome to another live stream. Happy Monday as well. Today we're going to talk about the news about the interest rate cuts getting pushed back. Then we're going to look into equities. We're also going to look into crypto, and we're just going to talk about how there's a lot of opportunity on the table when it comes to these assets. Right? You have things like Tesla, AI stocks pulled back. They did do a little bounce today, but you know, I think you're going to look at these next 6 to 7, 8 months, and after that, you're going to say, "Wow, those assets were on a discount," and you want to make sure you're definitely taking advantage of all the the decline in prices that we're seeing right now. And that's why I always say people need to have at least 5 assets on their list of assets they want to buy. So that way, when you have an opportunity like this, when assets go on a discount, you're ready to purchase them. Right now, it's not just good enough to have these assets written down. You need capital to invest. So, right, I would suggest people start saving up, right? Because I think in the next 3 or 4 months, we may see. I'm not too sure for crypto, but I'm pretty positive for if we don't, if it May 1st, I believe they're going to announce that they're not going to push or they're not going to cut interest rates. So I think if that comes out to the market, the market's going to expect it, but I definitely think that we will see an additional decrease in price. So, and we'll take a look at some of the charts for things like Nvidia, SMCI, Tesla. Like I said, Tesla's at 142. 142. I think today it hit 138 or 137, and it looks like it's going to go a little lower than that. So, yeah, a lot of good opportunities also in the crypto space as well. Like the last live stream, we were talking about the Bitcoin halving, and yeah, it's already happened. It happened I think over the weekend, and you typically after that 2 to 3 months following the halving, we see a surge in crypto prices, right? Especially for the altcoins. So yeah, you definitely want to have your crypto portfolio up to date so you can take advantage of the upcoming bull market. So yeah, let me go ahead and share my screen and let's talk about these interest rate cuts. All right, are rates high enough? Fed resets clock on interest rate cuts. Okay, so it says a string of disappointing inflation data has forced the Federal Reserve to reset the clock on its first interest rate cut and reevaluate the trajectory of price growth. Yes, so if you guys don't remember, I was talking about the recent inflation data that came out, I think it was like a month ago, or maybe it was a few weeks ago. But if you don't remember, we're trying to reach that 2% CPI number, right? They're trying to get to a 2% inflation, and I think it went from 3.2 to 3.5. So the Fed was expecting it to decrease so they can, anticipate when they're going to actually cut interest rates, or at least give out a date, right? Most people that are investing, that are in equities, that are also in crypto, they're looking for that date where the Fed's going to say, okay, we see inflation coming down and we want to cut interest rates in June, right? At least they give out a date so people can anticipate, people can start buying and things like that. But until we get that official date, investors are not going to feel inclined to invest just yet, right? A lot of people like to time the market around when they're going to cut those interest rates. So if we don't have a date, people are not more inclined to invest. But yeah, we're trying to get to that 2% number, and we went up, and again, it's disappointing to the Fed. So it looks like they're resetting their clock. So let's keep on reading here. It says Chair Jerome Powell sentimented that message this week when he said it's likely going to take longer than expected to gain the confidence needed to lower rates, dashing hopes for more than two cuts in 2024. Some worry there may be none at all. And remember, we were anticipating at the end of 2023 that we were going to get 4 interest rate cuts for 2024. That went to 3. Now we're down to 2. And now some people are saying, we might not have any interest rate cuts, which I don't think is going to happen, especially because it's an election year. And, politicians want to look good. I'm not going to say there's a conflict of interest, but, that definitely plays a role, because some people that work in the Fed, they're on either political side, and they definitely want to swing their actions to which party they believe in. Now, this is typically what happens. This is not like a for sure thing, but typically this is election year. The market tends to do good towards the end or during election time. So that way, candidates they can't use that against candidates, right? Oh, the market's down. This is why we need to get you out of office. So I think we are going to get those interest rate cuts. I think they're going to come towards the end of the year. But we also need that confirmation from the Fed when they have their meeting. And, they say, okay, we see inflation getting better a little bit. Let's decide to cut interest rates in August or September, right? Looking for that official date. All right, let's keep reading here. It says, this is confirmation that the Fed's willing to wait it out, said Diane Swonk, chief economist at KPMG. There's concern of how little it took to stimulate the economy, that there's still a lot of demand. Powell's lack of urgency to adjust rate echoes that of his colleagues. But the enduring strength of the economy and labor market alongside a market rally at the start of the year has also reignited a debate about just how restrictive monetary policy is. But the enduring strength of the economy, labor market alongside market rally at the start of the year. Yeah, that's right. The market did rally at the beginning of the year for crypto and the stock market. Now we're seeing a little bit of correction. And I think what sparked that in the beginning of the year was the AI plays, right? You had to see you've seen a big spike in NVIDIA, all the semiconductor plays, like all that went up. Anything that had to do with AI kind of sparked that initial run that we had at the beginning of the year. And yeah, that kind of set the tone for everything else to run a little bit. But it was basically for the first quarter of the year, it was just AI. And we're going to see, and that kind of trickled into the crypto market. You saw a lot of AI plays like Render. I'm trying to think. I think Near Protocol is AI associated as well. I think they were on the... Is it Near? I think it is Near Protocol. That was at the NVIDIA conference with the CEO. So yeah, it also spilled over into the crypto space. So AI took over. I definitely think this is not the end that we see for AI. I think definitely there's going to be like a second boom, and that might come once the crypto bull market picks up. And then also maybe more innovation, maybe more mergers, maybe more releases of new features and things like that with these new chips that are coming out. So yeah, it did spark a rally in the beginning of the year, like this article says, right? Okay, let's keep reading. It says Fed officials are increasingly voicing concern high borrowing costs may be. Let me say it again. Fed officials are increasingly voicing concern high borrowing costs may not be doing enough work to rein in demand, increasing anxiety among investors and analysts that the central bank may need to raise rates further. Okay, yeah. So basically, interest rates are up. So, the cost to borrow is up. But what the Fed is saying, this might not be doing enough work, right? Because we see inflation going up, and and yeah, they want to tame inflation. And he says increasing anxiety among investors and analysts that the central bank may need to raise rates further. I don't think they're going to raise rates again, but you never know. They may do it. Could they raise rates again and then maybe cut them twice? I don't see that they would do it. I feel like I feel like each year there needs to be an agenda, right? It's either you increase rates or you decrease rates for the year. I don't see the reason of increasing rates and then try to decreasing rates towards the end of the year, or you just keep it the same. In my opinion, they're just going to keep it the same, and they're going to decrease towards the end of the year. It says most policymakers have made clear they expect interest rates are at their peak, but some Fed officials have expressed an openness to the idea should it be necessary to tame price growth. New York President John Williams, who describes current policy as restrictive, said Thursday that rates is not his baseline expectation, but he added it's possible if the economic data warrant higher rates to reach the Fed's inflation goal, right, which is 2%, towards 2%. I don't know if they want to reach 2% exactly, or they just want to be in that range. All right, so enough of this article. We already read most of it. The conclusion of the article is that they're going to be, postponing the decreasing of interest rates. This is going to have an effect. Like I said, I think it's mostly going to have effect on high growth in equities and stocks, not in crypto. Because like I said, I think the Bitcoin halving and all that, we have our own cycle in crypto. I say we because I'm invested in crypto, but I think crypto's going to rally, whether it's one project at a time, certain narratives. I think it's going to be the narrative, just like we had the AI stuff in the beginning. I think for Bitcoin, it's going to be a rollout of narratives, and that's how the bull market is going to carry on. So, yeah. So let's look at the overall markets. All right, so if we look at the S&P is up, Dow Jones is up, Nasdaq is up, Russell 2000 is up, crude oil is down, gold is down, which is cool. What is also cool that I noticed today I didn't see, and I wonder if they just added this or maybe I was just missing it, but they have a event calendar if you go to Yahoo Finance, and they tell you, okay, like 357 earnings today. So that's companies that are going to state their earnings. I think NVIDIA comes out with their earnings for the first quarter of this year in May, their results. So, definitely if you're invested in certain stocks, you want to definitely keep up with earnings and things like that to see if they met expectations or if they didn't meet expectations, or, are they going to do a stock split and things like that, or other economic events that can affect your investment. So it's always good to keep up with stuff like that. And then also like the news page as well, probably skim through that, just to keep up. It's always good. And Yahoo Finance is free. I think they give out real good information. Obviously, I always tell people they should be paying for a subscription for whichever sector they're invested in, so that way they can be up to date in that specific category or that specific sector. So they make the best informed investment decisions, right? So, okay. So let's look at a couple charts. I was talking about Tesla earlier. Tesla is at 142, which I think it's a great price. I think Tesla at 142 is a great price. I need to get like another screen here. This is annoying. All right, yeah. So if we look at that, there's support at. Let's see the advanced chart. Go to the advanced chart. Okay, so here, what is this? This looks like the day, but I want to switch to. The okay right here. 2-year max. Okay, so if we look at Tesla, it has support at 125. All right. It looked like, and if you look at here, it hit 130, at 125 area. Like, so this area might go all the way down to 120 area and then bounce from there. That's what it looks like. If it breaks down from there, you might get to the $100 mark. Who knows? But I mean, Tesla at $100 would definitely be a good buy. I'm pretty sure it'll take a year to get probably back in the 200s. But again, you know, this is the opportunity we're seeing. All right, so let's look at Nvidia. All right, so you see Nvidia's having a pullback. Nvidia went to $900 and now it's having a pullback. Like I said, if you saw my other live streams, I said, okay, you know, it went from 164 to 900. You got to remember, in stocks, things don't just go up. Things take, like, they'll go up maybe, you know, 400 or 500%. And this is just an anomaly because AI is kind of like the hot sector right now. But typically it's like 100, 200%, or lower than that, 50, 60%, and it has a drawdown. If it doesn't have any narrative going for it, if it doesn't have any real demand, maybe you get, you know, you usually get like a 50%, 60% increase maybe on some news, but then the stock retraces. But this, from 164 to 900, it's definitely due for a correction. And it could probably get all the way down to 600, right? And what could be the catalyst for that is probably the announcement of keeping interest rates the same, and then maybe the Fed sounding a little maybe, you know, their tone is not that bullish. Maybe it's a little bearish, and maybe they, you know, and that triggers Nvidia to get to $600. I definitely think it's going to correct a little more than here. But who knows, right? Also, too, like I said, Nvidia is coming out with its earnings in May. So if they exceed earnings, or maybe if they make what or get what's expected, then maybe they do continue to rally, right? That can also trigger a spike. Who knows? This thing maybe could go to 1,500. Overall, I think it's a stock that can get to 3 to 5 trillion over 2 to 3 years. But, you know, some people try to time the market. Some people try to get the best buying price, which I don't totally disagree, right? Especially when you look at a chart like this. You look at a chart like this and you say, okay, it's overextended. It went from 160 to 900. It looks like it could correct all the way down to 600 because it doesn't really have any support, right? From 490 to 900. I mean, there's really no support in here. So right here, it's just like free fall, and wherever it just stops and gets some support, right? Right now, it looks like in the high 700s is holding, but I would probably, I mean, I'm not looking to get into Nvidia, but I'm just saying, from a technical analysis perspective, I probably wait on it. Just my opinion. All right, so if we look at Coinbase, wow, Coinbase went up to 260. It's at 225, so Coinbase is correcting, which is a little weird because Bitcoin went up. So typically Coinbase does a little bit better when Bitcoin goes up. But let me see. Yeah, Bitcoin's 2% up today. But like I said, I think we're getting to a point, because Bitcoin's market cap is at 1.3 trillion. So we're getting to a point where Bitcoin is becoming its own asset class. Like, it's not going to be affected by interest rates. It's going to be affected by these halvenings that happen, the cut in supply, and then the demand from these institutional investors, right? And then also when they're marketing these spot ETFs to the retail to purchase, you're going to see more demand. So I think right now Bitcoin is just becoming its own asset, and it's not going to get affected by a lot of these things that the Fed is doing, or what these high growth stocks are doing. Just my opinion, especially now that the halvening has ended. I think right now crypto is its own thing, which I like, because like I said, it creates that imbalance where you can now make a lot of gains in crypto, find your favorite equities, and get into them at a low price. For me, I like looking at Tesla. I really don't like looking at Coinbase because it's still connected to the crypto market. But Tesla, Nvidia, all those semiconductor plays. You know what I was looking at as well? I was looking at Shopify, and Shopify is very intriguing to me. And I'm going to tell you why Shopify. And it did bounce a little bit, and it's creating support. But I think Shopify is at a good price. Because if you look at their business model, I think almost everybody uses Shopify to build an online store. They really have that niche down. They really have that process down. Like I said, I try to create a store just to use the platform to see how it works, and it's pretty seamless process. Like you can literally get a store up and running within hours. That's how quick it is. And people are always wanting to sell stuff online. So I think Shopify, in my opinion, not financial advice, but I think that's a good buy as well. It wouldn't be the first thing I invested in, or it wouldn't be an all-in play for me. I know they're getting into crypto and stuff like that, but maybe, if it'd be a small percentage of what I got into. But I'm looking at, you know, I like to go all in, not all in, but a good portion of my portfolio in some plays. So I would definitely be looking at Tesla and the AI, like AI, Tesla, EV, those type of plays. Shopify is very interesting though, in my opinion. I definitely in what's the market cap for this thing? I don't know if it says it on here, and I don't want to skip the page. But yeah, Shopify is a very good looking stock to me. It's bouncing off the lows of 29 to 70. So maybe get a little correction. It's definitely going to need some, uh, you know, exceed expectation when it comes to earnings, and it's definitely going to need some positive news to come out for it to jump past its old highs. And let me look. I want to look at the market cap because I'm interested to see what the market cap is for Shopify. 89 billion. So yeah, 89 billion. For me, that's not a it's a lot of money, obviously, but I think it could definitely get to 160, and that will put it past its old highs, maybe get to a $200 billion market cap. And I can see that happening if it gets into like crypto. I think it's already started accepting crypto, but maybe somehow incorporate crypto in its business model. So, and maybe some AI stuff, get into the AI play and whatnot. I think Shopify is definitely something that can get past its old highs, which would be a nice double. All right, you always want to look for the double. I think if you could remember when I did the video on the if you had a penny and you doubled it for 30 days, you would have, I think it was like 5 million bucks. All right, and just the double. And like I said, if you go back to the video, you could start on day 24. I think everybody can start on day 24, which was like, I don't know if it was, I think it was like 20 or 30,000 bucks, or maybe 50,000, something like that. I think people, or 50,000 or 50 to 100,000. I think anybody can start. I don't know if it was day 24. It might have been like day 21 or something like that, where it was like anywhere from like 10 to 50,000. I think anybody could save that up. And if you look for these doubles, you could double that money pretty quickly. All right, so yeah, Shopify is another one. TSM, again, another semiconductor play, which is taking a little bit of dip. All right, again, this is like, I wouldn't say a competitor to Tesla, but it is kind of a competitor. But I think they help make, not Tesla, it's a competitor to NVIDIA. But they are a semiconductor play. I think they help NVIDIA make. So I don't know if I can call them a competitor. But definitely, seeing a little pullback because of AI. I would consider this an AI play as well because of the chips. Well, it is an AI play, right? The reason why it's pumping is because of AI. So yeah, SMCI. Okay, so SMCI took a dip, right? Went all the way to 1,300 bucks. So again, like I said, all these AI plays that had this surge, it needs a correction, and we don't know where it's gonna stop because the last support is 322. So for me, the way I try to figure out support is looking at the chart. So let's look at the chart, and where's the last place that it saw support? In this area right here. If we look at the chart, it saw support from $314 let's just say 250 to 300, like in this area, 200 to 300. And if you look at the date, it's 7 July 2023 to 12 2023. So it's about 6 months. 6 months. Well, it's not. We got to count from the dip, right? We got to count from the dip in like right here. So let's just say July to December. It took about 6 months for it to find support. So I would use that when I'm looking at charts. I would use that as the reference point. Meaning, if this doesn't stay in a certain range for at least 5 to 6 months, I would not call it support, because you could get an instance where it stays in a spot for 1 month and then it crashes. So let's say you buy at 700, it stays there for like a month, and then it just crashes down to 500. I would say real support, 6 months, 3 to 6 month time frame. Obviously, if you want to make sure, and this is just to make sure that you're getting close to the bottom. It's not, and it doesn't necessarily that's going to mean that it's going to do that. Maybe from 700, it goes back to like 1,500. Maybe you buy a little bit at 700 and then you dollar cost average when it gets to 500, because you don't want to miss out on a bounce to like 1,500. But in my opinion, it's overextended already. So it's going to need to consolidate for at least 3 months, 1 to 3 months. I would say more in the 3 months area to actually consider whatever it's at, wherever range it's at, to be support. And again, I'm looking at past things on this chart. I'm looking at past references to say, okay, this is a support area that took 6 months for the same chart, and it's pretty recent. Do I want to get in a stock prior to it showing that it has support? And the answer for me is no, but you could do whatever you want. I'm just saying I like to see a little bit of support, unless it's like a crypto play where the bull market is just beginning. That's just a totally different story. But when you're looking at equities when it's like billions of dollars, then it's you got to look for support. All right, so let's move on to the crypto space. The stocks are taking a dip. Most of them, the AI is taking a dip. And the crypto coin, equities in general are taking a little dip, because even Coinbase, even though it's connected to Bitcoin, it's still taking a dip. All right, so if we look at Bitcoin, it's up 2.23% for the last 24 hours. The last hour is down 0.28%. Last 7 days, it's up 5%. Market cap 1.3 trillion. So obviously, it's very mature, and it does its own thing. If we look at the top percent gainers for the last 24 hours, Pepe, Near, and Pepe's a meme coin. Near Protocol is like a smart contract. Like this was the one I was telling you about, the AI. And then all this other stuff I don't know, but I know that XRP, Arweave, Bit. So it looks like the AI plays are up. Well, I don't think the crash for AI happened today. So it might be that AI is bouncing, but when we looked at the chart, it just looked like it was diving, it was nose diving into the floor, right? So, because if we look at the crypto ones that are up for crypto, Near Protocol is an AI play, Benzor is an AI play, and I think Genos is an AI play as well, if I'm not mistaken. Yeah, and then everything else is pretty much just different categories. So, what do I expect for the crypto market? Like I said, we already had the Bitcoin halving. So, again, if we go to the Bitcoin chart, let's just look at the last halving. All right, so last halving was May 2020. And past performance doesn't indicate what's going to happen in the future, but you definitely want to take a look at what happens because the last three halvings were kind of similar. So May, let's just say it happened in May, right? So this is May 1st, $8,000. Uh, in June we were $1,600 up. That's like what, a 12-15% gain in a month. It was 8,800, my bad. But still, like up $1,200, still like 10% around there. And then it was just up from there. It's basically what I'm trying to say. Like we had the halving in May 2020, and it was basically just up from there, right? Like literally, what, June, July, August, we're up 3K. So 30-40%. So within 3 months, we're up 40%. And then, boom, right? Then we're up 500%. So like I said, after the halving, it's basically just up from there for a year. For a year straight, you just have upward action. It may consolidate for a little bit for these next 2 to 3 months, but it's basically just up from here. And the fact that we already passed its all-time highs, like I said before, is very bullish. And, most likely it'll consolidate a little bit, or maybe it hits that 70K mark, and then from there it's just going to go. So I expect good stuff from the Bitcoin market. The crypto market, but Bitcoin specifically. I think it's going to be a Bitcoin year. I think Ethereum's going to do well, obviously, because it's the top crypto, and people are going to be expecting the Ethereum spot ETF. But they're supposed to come out with an announcement, or the decision. The SEC is supposed to come out with the decision in May to say, okay, what are we going to delay the ETF, or are we going to keep it? Are we going to approve it? And the sentiment now is most people think they're going to not approve these ETFs for Ethereum. So if that happens, you got to think about it. The spotlight is going to be on Bitcoin because they already have their spot ETFs approved. So I think this summer is going to be a lot of Bitcoin narratives, like the layer twos on Bitcoin, the DeFi stuff happening on Bitcoin, the ordinals, all that stuff. I think it's going to be the play. I think it's going to be a Bitcoin narrative where coins associated to Bitcoin are going to benefit a lot. And like I said, I think Ethereum's going to do really well this bull market, but I don't think it's going to outperform BTC unless we get that Ethereum spot ETF, because we already had the Ethereum upgrade happen, and we're running out of catalysts for that. And remember as well, the SEC did, give Uniswap a Wells notice. That's the biggest DeFi protocol, I think, out of all the protocols, and it's on Ethereum. And then also Ethereum's being investigated for potentially being a security. So they have a lot of negative news coming up. I'm not saying Ethereum can't bounce. I think Ethereum's going to be at $8,000 to $10,000 towards the end of this bull run, but I think right now it's just Bitcoin's time, right? But definitely some gains to be made in the Ethereum space, but I think Bitcoin's going to come first, which is going to be good, I think, for people that are following the narratives. Like I said, if you ride a narrative that comes first, you could take what you make from that narrative, and then you can put it into a narrative that may have not popped off yet. So, Yeah, very interesting stuff. I think we're gonna see some good movement here. All right, so let's do the last thing I want to talk about is this article that I saw. It's called Why the Magnificent Seven's Momentum is Collapsing. And let me see if I can remember. The Magnificent Seven is Facebook, Nvidia, Tesla, Amazon, Apple, Google. Okay, Facebook, Meta, right? So Meta, Google, Apple, Nvidia, Tesla. What is the other one? Microsoft. And there's one more. I'm missing it. Let's see. Apple, Google, Microsoft, Amazon, Meta. Okay, so is it 1, 2, 3, 4, 5, 6? There's only 6. Apple 1, Microsoft 2, Amazon 3, Meta 4, Nvidia 5. Am I crazy or something? Okay. Okay, Magnificent Seven. Maybe. Oh, so the S&P and the Nasdaq. Are they counting the S&P and the Nasdaq? I guess they are. Okay. So those are probably, I didn't know that. I thought it was 2 other ones. Okay. So it says, okay, let's just read. The run may be over for the 7 stocks that drove the lion's share of the stock market over the past year. UBS Bank Chief Equity Strategies Club downgraded 6 of the Magnificent Seven stocks. Okay, so this is only 6. 1, 2, 3, 4, 5, 6. So there's one more. There are stocks. It's not the S&P. His call comes in the Magnificent Seven, which also includes Tesla. Just endured its largest. Oh, okay. So 1, 2, 3, 4, 5, 6, and then Tesla. My bad. I was not. I guess I don't know what I was doing. His comes maximum, which also includes Tesla, just endured its largest weekly market cap loss in history. All 7 of the big tech are off their recent highs, a decline punctuated by a 10% single day trade down from midday on Friday. Yeah, like I was saying, these all, I mean, if you look at the charts for all those, except for Tesla, I don't think Tesla was overextended. It was overextended like 2-3 years ago, right? And then we're just seeing the tail end of this crash, because if you look at the Tesla chart, it's just crashing, right? It's trying to find support. With little bounces in between. Global, who rates sectors with the S&P, not individual stocks, remain overweight on technology outside of the 6 stocks named in his note. Overweight, but for large companies that have grown earnings significantly over the past year, Global believes the tide may be shifting and other areas are set to outperform the largest stocks in the S&P. Crypto is probably one of those. Our downgrade of the big 6 from overweight to neutral is not predicted on extended valuations or doubts about AI. Rather, it is an acknowledgement of the difficult comps and cyclical forces weighing on these stocks. These forces do not apply to other tech companies or the rest of the market. Okay, earnings for the S&P have largely been driven by profit growth at the large tech firms. That expected to play out again during first quarter reports, with fact-setting Project, Amazon, Alphabet, Meta, Microsoft, Nvidia will combine for earnings. Blah, blah, blah. All right. But giving increases, the U.S. is growing faster than expected. Okay. Yeah, so the Magnificent Seven is taking a collapse, as we saw. You know, the AI, Nvidia, Tesla, they're all trying to find a bottom. And I think the best thing to do here is just try to be ready for when they do find the bottom. I would say, you know, if you could, 5 to 10K stashed away to try to get into some of these plays and try to capitalize on some of the stocks, your favorite stocks that are going to be on sale. Because again, like I said, I think from a year and a half from now, we're going to look back and we're going to say, oh, wow, Tesla's at $350. I could have bought it at $100. You definitely don't want to be one of those people. You want to make sure that you take advantage of all the opportunities that are in front of you. So that's why I always say everyone should have a list of at least 5 stocks that when they go on discount, you're ready to buy them. You have, you know, sufficient savings on the side to to put into these assets because they go on discount. And that list can always change. It doesn't have to be the same list. As you get more information, as you are aware of things transpiring in the market, you should adjust that list and make sure you're paying attention to market cap. Market cap is very important when you're investing, because if you have something that's $500 billion in market cap and you're looking for a double, do you think that's going to reach $1 trillion? If the earnings is not there, if the technology is not there, most likely that's not going to do it. Tesla is probably one of those companies that could do that very quickly because of the expansion of the EV space, and they're the number one in that area. And then they're also, they're heavy in the AI as well. So as Tesla's like an AI play, but more example would be Apple. I don't think Apple, even though they're getting into AI, they're one of the biggest companies when it comes to market cap. So it's going to be hard to move that price. And if you're looking for a double, it's probably not the best stock to look at. But yeah, that's pretty much it today. I will be on again Wednesday. Appreciate you guys for tuning in, and I'll see you guys in the next one. Take care.